Welcome to the channel Get Rich. Today we are going to look into 4 stocks I am watching in the Indian stock market. So let's get started. So the first stock we are going to look into is Gabriel India Ltd. So what are they doing? So first before having a look into what are their business segments, let's first have a look at some of their key parameters. So the first one is market cap. So they have a market cap of about 2035 crores and they have a PE ratio of 22.8. And then if you look into the price to book value, which is 2.81, and the dividend yield is 0.63%. And the debt to equity ratio is 0.02, which is very low, very good. I like companies who have very low debt. And if you look into the return on capital employed, which is 12.3%, return on equity 8.9%, and return on asset 5.45%. And if you look into the sales growth for the past 5 years, it's just 4%. And if you look into the profit growth for the previous 5 years, it's just minus 5%. So this is because the automobile industry as a whole have seen lot of degrowth or lot of headwinds, and the automobile industry, lot of companies, the growth numbers shattered. So we can have a look at the comparison with the industry for the Gabriel India Ltd. And then if you look into the operating margin, which is 8%, and then the promoter holding is around 55%. So let's have a look at their business segment. So if you look into the Gabriel India Ltd, so they have about 61% of their revenue is coming from two-wheeler and three-wheeler, and then 24% is coming from passenger vehicle, and 13% is coming from commercial vehicle. So what is their main key product? So their main key product is the shock absorbers. So all of the different kind of shock absorbers for two-wheelers, three-wheelers, and for passenger vehicles, commercial vehicles, and so on. So in Q2 financial 2022, they have 66% is from two-wheeler and three-wheeler, and 22% from passenger vehicles, and then 10% from commercial vehicles. But if you have a breakdown between how much percentage of their revenue is coming from OEMs, how much percentage is coming from replacement market, and how much is export, and then in the last quarter they did 81% of their revenue is coming from OEM, 14% from replacement market, and about 5% from export. Though the revenues from replacement market is increasing, but still it's very small amount if we compare 14% with 81%, which is the OEM. So still majority of their revenue is coming from OEMs. And then if you have a look at the different aftermarket breakdown, so in the aftermarket segment, 40% of their revenue is coming from two-wheeler, three-wheeler, 37% is coming from passenger vehicles, and 9% is coming from commercial vehicles. So let's have a look into their two-wheeler and three-wheeler segment. So as I said, they have 66% of their revenue is coming from two-wheeler, three-wheeler segment. If you look at the market share, how much market share they are having for their two-wheeler, three-wheeler segment, they have about 25% of market share in this particular segment, which is shock absorbers and this kind of segment. So they have about 25% market share. And if you look into the revenue trend, so in this segment they have about 4% increase over the several quarters. If you look into their recent launches of the different vehicles in the two-wheeler segment, they have TVS Motors in Rider, Jupiter 125, and then Bajaj Auto, they have R107 and CNG, and then the EV customers which they are working with different various programs, and also Ola Electric. They are also involved in several electric vehicle manufacturers. For example, in two-wheeler they are involved with Okinawa, Ether, Ampere, and also in three-wheelers with Bajaj, M&M, and TA. Their top 3 customers are TVS Motors, Yamaha, and Bajaj Auto. Then let's have a look at the passenger vehicle segment. They have about 22% of their sales is coming from passenger vehicle segment, and they have a market share about 21% in the shock absorber category in the passenger vehicle segment. And then if you look at the revenue trend, which is going negative, minus 15% for this particular segment, because I think the passenger vehicle segment is slowed down, and also they have lost a few of the key deals in passenger vehicle segment, I believe. And then if you look into the new program, they are in Maruti Suzuki, Y0M, YWD, YFG. And then if you look into the future development, they are working with Mahindra and Mahindra, Volkswagen, PSA, TML, and also top 3 customers are Maruti Suzuki, Volkswagen, and Mahindra and Mahindra. And if you look into their commercial vehicle segment, so they have about 10% of their sales is coming from commercial vehicle segment, and they have a market share of about 75%. So that's very huge. And if you look into their programs they are working on, which is a WAPCO air suspension and force motors T13350, they're also working with future development, for example Ashok Leyland, MPB as a partner, and they are also working with DAF in 2 programs. Their top customers in this particular category is Tata Motors, Mahindra and Mahindra, and Ashok Leyland. And if you look into the aftermarket segment, so their aftermarket sales is growing pretty nicely. They have about 7% sales. They are having a very good growth in this particular segment, even though the entire market is in slowdown phase. And if you look into their distribution network, they have about 15,000 retail outlets supported by their sales force, and they have successfully launched brake pads. They are also going into new product categories. So they have achieved about 95% of the sales in financial year 19 to 20, though the industry was down by 15%. They are always ahead of the market, and they are also introducing different product ranges. And then if you look at their comparison with the industry growth, for example, in 2-wheelers, industry grown about 2.6%. The Gabriel India Ltd, they are growing about 6.5%. 3-wheelers is 3.6% compared with they are growing at 12.6%. In passenger cars, which are doing at 1.3%, but they are not catching up, so they did about 0.1%. Commercial vehicles did at 1.5%. They grew about 6.9%. That's growth. That's very good. They outperformed the market. And then if you have a look at their different customers in 2-wheelers, they have most of the OEMs: Honda, Bajaj, Suzuki, Yamaha, TVS, Ola Electric, Ather, and so on. And in passenger cars, they have Honda, Mahindra, Maruti Suzuki, Renault, Skoda, Tata, Volkswagen. So have a lot of OEMs they have in this particular category. And if you look into the commercial vehicle and railways, they have Ashok Leyland, Daimler, DAF, Force, Mahindra, Tata, and so on. And for example, they have different electric vehicle customers in 2-wheeler. If you look into the, for example, Ampere, Ether, Hero Electric, Ola Electric, Piaggio, TI, Mahindra Electric, Bajaj, all of these particular EV companies are their particular customers. So they are immune to the EV transition, which is going to happen sometime in the coming years. So they are EV immune, and it's a very good company. So I put this in my watch list. Truly, if I have to be very honest, I'm thinking this is very interesting company to have a look on, because the evaluation seems interesting. I will do a video, detailed analysis video of Gabriel India Ltd in coming weeks. So then the second company I am watching is Fiem Industries Ltd. It's also an automobile ancillary company. So they have a market cap of 1,669 crores, and their P ratio is about 20, and price to book value is 2.85. They have a dividend yield of 1.26%, and they also have very low debt. So their debt to equity is 0.06. And if you look into the return ratios, it's not that great, but they are also having good return rate, and also the growth rate is pretty less. As I said, the automobile industry growth was pretty limited during the past years, so that's why their growth is also not that good. And if you look into the operating margin is 12%, and their promoter holding is 66.56%. And if we have a look at their particular segment, what are they working on? They're mainly active in automatic lamps, for example headlamps, tail lamps, fog lamps, rear view mirrors, and so on. They are also doing some sheet metal parts and also plastic molded parts. So these are the main categories they are working on. They also have LED segment. They have LED luminaries for indoor and outdoor applications. So who are their top clients, for example? So in 2-wheelers, they have Honda, TVS, Yamaha, Suzuki, Royal Enfield, and so on. And then for example 4-wheelers, they also have Force Motors, Hyundai, Daimler, etc. And if you have a look at their revenue breakdown, almost 40% of their revenue is coming from automotive lamp, and then auto LED lamp contributes about 27%, and others are minor when compared with these segments. And if you look into their revenue breakdown between OEMs and different exports and so on, so the OEMs form the majority of their revenues, and they are mainly concentrated in two-wheelers. Almost 95% of their revenue is coming from two-wheelers, so they are not much active in four-wheelers. And they have a market share about 27 to 30% of two-wheeler headlamp market in India. That's very good. They are a market leader in this particular segment. And then if you have a look at their customers, they have different customers like Honda, TVS, Yamaha, Suzuki, Eicher Motors. They are also active in a lot of electric vehicle manufacturers. So I think it's Ampere, Revolt, and so on. They are also having customers who are working with electric vehicles. So they are also immune to electric vehicle transition. So they are not going to disrupt it, because even in electric vehicles, headlights and so on, it's not much much change is required. And I think they have more this kind of lamp futures in electric vehicle when compared with for example the traditional vehicles. So who are their top three customers? So they have Honda, TVS, Suzuki. So these are the three main customers of this company. And then let's have a look at their third company, which is Tatva, Chintan, Pharma, Chem Ltd. So if you have a look at their key metrics, so they have a market cap of about 6,000 crores, and if you look at the P ratio, it's 116. It's quite big, but they are growing pretty good. But the trailing P is 116, but if you look into the forward basis, it's somewhere between 55 and 60. It's a forward P. It's still expensive, but if you look at their growth rates and if you look at their return ratios, they are very superior. So it can be, for example, if they keep up their growth rate for next 2-3 years, this stock can be a very good attractive valuation. But currently I am feeling it's the valuation is on the higher side, but always the growth stocks trade much rich valuation. So I think if I can predict their future growth potential, so based on that I will also do a video of this company, the detailed stock analysis video. So currently I am watching this company. So if you look into the price to book value, it's 13.6. if you look into the debt to equity ratio, it's 0.17. that's also attractive. And if you look at the return ratios, they have 28%, 37 and 18%. That's very great ratios, very good. The sales growth past 3 years, 30% CAGR. Profit growth, 62% CAGR. They are growing very good. And then if you look at the operating margin, they have 22%, and their promoter holding is 79.17%. So that's pretty good as well. And then if you have a look at their business segments, so they have different chemical manufacturing. This is a specialty chemical manufacturing company, so they manufacture different types of chemicals. So if you look at their biggest revenue segment, which is 40% of their revenue is coming from structural directing agent, SDAs. So they are the second largest manufacturer of SDAs of zeolites globally, and the largest and the only commercial supplier in India. So they are a monopoly in this particular segment. They have almost 40% of their revenue is coming from this particular segment. So if you look into the applications of these zeolites, they have applications in automobile, catalytic converter emission control, and they have applications in petrochemicals, and then they have also these applications in chemistry and catalyst and so on. So these are the main applications for the zeolites. Yeah. And then if you have a look at the next one, which is the phase transfer catalyst, which is about 27.49%. This is the second biggest, so I think it's the third biggest after pharmaceutical and agrochemical intermediaries and other specialty chemicals, PASC. So PASC comes second, 30.98%, and then third comes PTC, which is 27.49%. And if you look at the applications of these two, so if you look into the application of these two, they are also used in pharmaceutical APIs, and then pigments, agrochemicals, and then they are also used in, for example, lithium-ion battery, and they have several applications. So and then the fourth one, which is electrolyte salts, which is 1.02%, which is very small percentage compared to other business segments. And then if you look at their customers, they have customers like Merck, Laurel Slab, Divis, Atul, SAF, and then they have a lot of Asian points and so on. So they have a lot of very good customers. So they have out of 1300 customer base, they are reducing their customer concentration. So the top 10 customers was 60% in financial 2019, and currently it's 47% in financial 2021. So they are diversifying their customer base. That's also good. So this company, yeah, it's looking good. The valuation seems rich, but their growth potential, I think, justify the valuation. So I think I will also do a detailed analysis video with this company, but this company looks interesting for the coming years. So I don't know about the valuation. I have to still do detailed analysis of the valuation side, but this company looks interesting. So I'm also watching this company going ahead, watching the price, because if you like a company, so if you like a company, we have to put it in the watch list, and then only we know during a market crash, for example, if this company goes down at attractive valuation, you can go and buy them. You not necessarily have to buy now immediately. If valuation did not justify, you just put it into your watch list, and then if the price becomes attractive, then you go and buy that stock. So this is the third one I am putting in my watch list. And then the fourth one, which is Polyplex Corporation Ltd. So if you look into the market cap, which is 5,850 crores, and the P ratio is 12.6, price to book is 1.87, and the dividend yield is 8.8%. But then they almost paid out 100% of their net profit in the previous year, but they are also not consistent with the dividend. So you have to take that into account. And then the debt to equity, which is 0.26, and then the return ratios, it's good, 26%, 16%, and 14%. And then the sales growth is 11%, it's good. Profit growth 48% for the past 3 years, that's also very good. And if you look at the operating margin, it's 20%. Promoter holding is 50.97%. So they are also, it's also looking good. And then if you have a look at their business segment, so they are mainly active in PET film. So this can be used in packaging and many other industrial applications. So mainly thin PET film becomes 57% of their revenue, and then coated film is 14%, and other, for example, films are mainly becomes their revenue or business segments. If you look at their geographical diversification, almost 27% of their revenue is coming from America, 25% of their revenue is coming from Europe, and 24% is coming from other Asian countries, and 18% of their revenue is coming from India, and 6% from rest of the world. If you look into their for example, market share, so they did an utilization rate of about 95%, more than 95%, and then their market share is about 25% in Thailand, 25% in Turkey, 10% in India, 10% in US, and 10% in Indonesia. So they are a worldwide global player. If you look into their where they stand, if you look at the capacity of these particular PET film, so they are globally 7th biggest capacity holder in this particular category. So they have globally 7th biggest manufacturer of thin PET film. That's pretty good, I would say. And then if you have a look at the applications, for example, they have food applications, like retort pouch, shutter films. So a lot of the different packaging categories, they are present there: ice cream cone, candy wrap, meat wrap, baby food powder, chips bucket. So they have very good applications in different food packaging, personal care, health and hygiene packaging, and the product labels, glass bottles. So they have a different applications, packaging application. Almost 70% of their revenues applications is coming from this particular packaging category, and then 30% is coming from the industrial category. So if you look at the industrial category, they have solar panel back sheets, wire and cable overwrap, motor industries, motor insulation, flexible circuits, and so on. And if you look into the different other different categories, they have building and construction field, they have window film, flexible ducts, and then digital printing for x-ray and so on, and then thermal lamination, and they have different other possible applications in the industry. So that's pretty good. So these are the four companies I am watching, and then I'm looking into the valuation. Some of them went up pretty huge in the past years, and valuation looks rich if we look into the previous historical valuations. So I will be doing detailed analysis of these companies in the coming weeks, and then I will let you know my price target for these companies. The Gabriel India Ltd looks interesting for me at the valuation standpoint, and also Fiem Industries, but then they are mostly concentrated in two-wheelers. Yeah, two-wheeler is it's also going to be very good in the coming years. So if you look at the Tatva Chintan, it's a very good growth perspective, but then if you look into the valuations, it's a little bit concerning. And also Polyplex, even though PE looks very low, 12.6, but then historically it was trading at very lesser valuation. So yeah, you have to take that into account. So I will do a detailed analysis in the coming weeks. So that's all for today, and thank you for watching. And if you like this video, like, share and comment. And then if you want me to analyze any other company, please put these companies in the comment section below. And also please subscribe to my newsletter, which is completely free. You can subscribe in the link below. That's all for today, and thank you for watching, and have a nice day. Bye bye.